Yet another month has already gone by. April is here. So we are going to be taking a look at the dividend portfolio in March of 2026, taking a look at how the portfolio performed, what we bought and sold, and all the dividends we received, and some also exciting updates for the growth of the portfolio as well. And finally, I did get around to getting the spreadsheet ready to launch. So it's launching now as the full release version. There'll be a small fee through Patreon that I'm going to be charging on a monthly basis for that. So if you are interested, there'll be a link for the Patreon down in the description, and I'll talk a little bit more about that later on in the video. So right now, looking at the portfolio spreadsheet before making any updates for the month of March, we didn't get any dividend raises this month, which is fine. Portfolio value market did go down some this month, so around $17,000, and our projected dividend income right now is $430. So making progress slowly but steadily. We'll go over here to Fidelity to download the transactions. I have them filtered out March 1st through the 31st, so we can download the transactions, save them off to my computer here, and then we will go in to my spreadsheet and go to import, and then upload that CSV file, and we'll be able to import all these transactions, and I will be able to parse through them using my scripts and put all the data in my spreadsheet where I want it to go. So I got the transactions. I'm just going to go to dividend scripts and insert new transactions. It should give me a pop-up here in a second asking me to confirm that I checked the settings, which I did. So we'll go ahead and run that, and this will take a few minutes. In the full release version of the spreadsheet, you will get it to run faster. That's part of the reason that I'm charging a fee, is because I'm going to be purchasing a premium API that allows you to run it faster. So that is one of the perks, certainly. And once that's done, we'll go ahead and look at the transactions and dividends received. All right, the script finished running, and we can see quite a few transactions here this month. In the month of March, we made a good amount of purchases of Microsoft and HP, so we'll look at those in the kind of aggregated view in a little bit. No sales this month either, and if we look at dividend payments here, I have to scroll all the way down through 5 years of data. We have these dividends here for the month of March. So $2 from Aflac, $3 Southern Company, $9 from Pfizer, almost $12 from Johnson & Johnson, $2.50 from 3M, $2 from Microsoft, less than $1 from Amcor, $3 from Lockheed Martin, $1 from Travelers, and $2.17 of interest on our cash. Interest rates are generally going down, at least they have somewhat over the past 6 months, and also our cash balance is dwindling, so that interest on our cash is becoming less significant, certainly. But if we do look at the month, we got a total this month of $39.01. Don't forget about that penny. Pennies are important, even though they don't make them anymore. I still think they're important. So a little bit of a lower month, I guess you could say, this month, but still trending in the up and up. I guess if we look back, the last time we were paid by these companies was December, $42, September, $41. So we did see a little bit of a dip here in the third month of the quarter. I'm not sure why that was. Part of it was probably just cash interest going down, but I'm not sure why. It could have been related to the Amcor split and spinoff, basically. Not a spinoff, but just a reverse split. So I now have less shares, less ownership total, because some of it just got converted to cash. So that could be part of the reason. If we look at quarterly dividends, $107 this quarter, which is actually a little bit disappointing, because if we look here, I think it's the first quarter in 4 years pretty much that the current quarter has been less than the previous quarter, but that's fine. We'll take it in stride and keep contributing to the portfolio, and hopefully that continues to go up. Then yearly dividends, obviously just $107 on the year so far. If we look over here at invested by ticker, this is where we can see kind of aggregated of what we invested in which companies this month. So if we sort this and ignore that warning, we can see we invested a grand total of $136 in Microsoft at an average cost of $371 per share. So I'm pretty satisfied with that $371 average cost, a little bit below 400 like it's been this month, so I'm happy with that. We invested $75 for total shares for HP, below $19 average cost, which again I'm happy with that. And then these two, J&J and well actually JP Morgan, this is just I wanted to invest a little bit in JP Morgan. Not a super great price, but certainly lower than they've been at recently. I like to just continue investing in companies over time, little by little. Even if it's not at a super attractive price, I want to continue growing my ownership stake. And then I think the rest of these are just dividend reinvestments. So I have automatic dividend reinvestment turned on. So all the rest of these are just dividend reinvestments. Actually, never mind. Carrier Global was not a dividend reinvestment. So that was a standalone purchase of $10 at an average cost of $56.50. So I guess not a ton of activity in terms of number of companies this month, but invested a reasonable amount in Microsoft. So that is a total, I guess you could say, investment of $272 this month. So not too bad. Definitely still have some cash left, and that's part of the exciting news is that I'm going to start contributing $100 a month again to this portfolio, which I'm excited about because my cash was getting on the lower side. Certainly have a few $100s left, I think, right now, but on the lower side. Ticker changes, actually, we won't look at this right now. I don't really use that page much, but it can be helpful to see how your different companies are performing each month or over a longer period of time. Let's go back to the summary to see how some of the numbers have changed. Portfolio value is up by about $100 just because of the additional contributions, investments to the portfolio. And then dividend income is up by about $8 to $438 projected for the year. Average dividend CAGR 5-year is 5%. So like I said, I want to increase that. Companies like Microsoft are going to help me get there for sure, that I just invested a bunch more in this month. So that's good. And I'm looking for a dividend yield. Yeah, dividend yield still at 2.5%. So pretty conservative there. Nothing crazy. Just trying to, keep investing and reinvest those dividends, but really want to focus more on dividend growth over the next few years for sure. So getting close to halfway to the $1,000 mark in annual dividend income. So that's exciting. Hopefully we'll get there in a few months, I think. If we look at equity by sector and dividend income by sector, still pretty heavy in tech and healthcare for sure. Industrials, I think, is the next up. So I don't really have a problem with that. Obviously, tech is a pretty big part of the overall market. Maybe you could argue I should be less in tech with this portfolio to hedge against, all my other investments that are just in the overall market, which are heavy in tech. But I think a good amount of my tech companies are not like the super high flyers like NVIDIA, Amazon, Google, stuff like that in this portfolio. I do have obviously Microsoft and Apple, which are two of the biggest, but I also have HP and Texas Instruments, which are big companies, but not in the top 5, 10, range. We can look at upcoming dividends as well. This is what we're projecting for the month of April. So we're projecting a total of $34 in April. The big one here is from HP of $23, and that's pretty exciting for me actually, because this I think is probably the first time that my dividend reinvestment will purchase a full share. And as you can see, this one actually already went through. I'm recording this on April 3rd, and this paid out on April 1st. So I got over a full share that was reinvested from the dividend, which is pretty cool. If we go back to the summary page, actually, we can look at our dividends dripped per payment, and we can see HP is projecting 1.2 shares dripped every single dividend payment, which is pretty cool, I think. If you look at the weighted average for the portfolio, it's still pretty low. What is it? 0.15. So for all my companies on a weighted basis by allocation, I'm only getting 0.15 shares per dividend payment. But obviously a lot of these companies like Travelers, $293 a share, Microsoft, close to $400 a share, Caterpillar, $700 a share. So those, it's going to take a really long time until I'm getting a full share for every dividend payment. And those are really dragging down the average for sure. But it's a cool little metric to look at that I enjoy looking at. Upcoming dividends, like I said, $34 projected for the month of April. This one is projecting $437 over the next 12 months. And if we look at charts here, value over time looking good. Been stagnating, but the market has been stagnating and I haven't been contributing to the portfolio, but that's fine. Dividend income must have had something weird going on with the data here to cause this drop, but that's fine. Sometimes the data just gets messed up for a short period of time. Payout ratio around 40%, which is pretty solid. 5-year dividend CAGR just above 5%. I really want to get that higher, and that's something, like I've said, I do want to work on. So I think starting this month with Microsoft reasonably heavy purchases, I think is a good start. And we'll continue in that direction in the future, hopefully. So I want to shift gears here for just a minute and talk about the Patreon and Spreadsheet, and then we'll go back to looking at the performance of the portfolio this month and comparing it to the overall market, which I'm always excited to look at. For the Patreon and Spreadsheet, there's going to be 3 options like you see here. So the basic version just uses the most basic version of the API, so it's going to be a little bit slower. Not quite as quick in terms of how quickly some of the scripts run. That's really the only downside. This premium version is a little bit more expensive, and that's because it uses the premium version of the API, and so that will allow those scripts to run a lot quicker, within probably 30 seconds or less, I would say, for most of them, where the other ones might take a few minutes, or it might take like 10 or 15 minutes depending on how many transactions you have. And then this ultimate package is just going to provide you with more support, more one-on-one support if you need help setting stuff up, if you just want more support and guidance along the way, if you just want more one-on-one discussion in terms of how I can improve the spreadsheet, stuff like that. I honestly might reduce this price some to more like $12 to $15 or $16 a month. I'm not really sure, but I just kind of threw that up there if anyone does want kind of that more premium level of support and one-on-one help if they want that. I wanted to offer, like the first 6 months at a reduced rate for anyone that's been beta testing. Patreon doesn't really let you have a discount for, the first 6 months or something. It's just lets you do it for the first 1 month. So I think for anyone that has been a beta tester, and I'll be sending this out on an email explaining, I'm going to be offering 80% off for the first month. So pretty big discount for the first month, and then obviously it'll go back to the regular price after that. And so if you have been beta testing, you will have until the end of April to sign up for the Patreon, and then if you haven't signed up by then you will lose access to the spreadsheet and won't be able to use any of the scripts or anything like that. So that's kind of my plan at this point. If you have any questions or suggestions, definitely let me know. I'm always looking for feedback and ways to improve the process, improve pretty much anything about this spreadsheet. And now looking at the performance for the portfolio, first up we'll look at 5 years. Annual return 11.5% compared to the S&P 500 of 12%, so lagging just a little bit there. Hopefully over time we can get closer to that for sure. 3-year performance 12.4% compared to 18.3% from the S&P 500, so definitely lagging a good bit there. I would say the 1 to 3 year time frame is where I underperformed pretty significantly, I think, compared to the markets. And then the past year we've been doing a little bit better, really the past 6 months more so probably, because we can see still lagging on the past year, 13.5 the past year compared to 17.8 for the market. Year to date up 3% compared to down 4.3 for the market. And then 1 month we're beating the market a little bit as well, down 4% compared to down 5% for the overall market. So pretty positive results the last 6 months, but that's a pretty short time frame and it doesn't really mean all that much. What'll be important is if we can extend that performance to a longer time frame, which odds are maybe not, unless the market keeps stagnating or tech is not doing nearly as well, because frankly, if companies like Nvidia, Google, Amazon, if those are performing well, those are a pretty big chunk of the S&P 500, and I don't have any allocation to those in this portfolio, so I'm losing out on those gains, and just not going to perform as well as the market in that kind of a scenario. But I'm totally fine with that. I have a lot of other investments that are just in the S&P 500 as a whole, so those investments will take advantage of that acceleration in growth from those other companies that I don't have allocation to in this portfolio. So I'm optimistic about how the portfolio is going. Looking forward to adding to more companies in the month of April that are at a discounted price and are companies with higher rates of dividend growth, so I can keep increasing my dividend growth metrics in the portfolio, because that is a big focus for me, as I still have a number of years before I'd like to actually use the dividends for sure. So that's kind of where my thought process is. I would certainly be open, I think, to adding more companies to the portfolio, but I think at this point I would have to see something really attractive to add something new. But if you do know of anything that you would recommend or recommend me looking into, always would be interested in doing that. So let me know if you do have any suggestions on that, or just other suggestions as to how I can improve the portfolio. Looking forward to seeing some of you guys sign up on the Patreon. Will be private Discord channels and all that, so you can have some support. I want to say, obviously, the basic and premium versions of the spreadsheet, you'll still have some support. You're still going to get some help from me if you need it. It just might not be at that level and one-on-one as it might be if you purchase that highest ultimate package. So let me know if you do have any questions. Thanks for sticking around to the end of the video, and I'll see you all in the next one.